Private equity uses AI tools extensively actually within their companies in improving how they operate and making them more efficient and improving productivity. That's a really important part of that overall picture of how I'm going to help this company to grow. But fundamentally, it is a people business.
Hello and welcome to this week's Tea Break. I'm Al-Enazi, joined as always by my co-host Yuri. Today we're thrilled to be speaking with Charlotte Morris, co-lead manager at Pantheon International. Charlotte, thank you so much for joining us on the show. And I've heard you've gone for the coffee. Any reason why?
I have indeed. I said to Yuri, is this controversial in a tea break, having a cup of coffee instead? Coffee is a little bit, I like to call it an affordable luxury.
Well, I've gone for the chamomile tea today, Ali. And I'm trying to stay calm. There's all this testosterone being pumped around by the so-called world leaders, each fighting for their own sphere of influence. And I mean, we had a wonderful opinion piece from James Backus of the Cato Institute, and Jim describes today's picture of world trade as one, in his words, of cacophony and chaos, with a sidelining of the World Trade Organization. Is it possible, Charlotte, that the world's strongmen, they get together, they abandon the 3/4 of a century-old trading system in the same way that they're marginalizing the United Nations today? What would this mean for investors such as yourselves?
The World Trade Organization is really important for things like creating certainty and, not having so much worry about how geopolitical tensions might play out in how companies operate. And the lack of certainty from the macro picture has made investment more difficult because in private equity, you're typically looking at a kind of 5-year horizon and you want to have an idea of what's going to happen over that period of time to underwrite how a company might perform. So I think it serves a really important purpose. I don't know that it really is the best solution if, as you put it, the kind of world's strongmen come together and find their own solutions, because really all that results in is the sort of more dominant strongmen who have some sort of advantage setting up a system that is beneficial for certain countries and the kind of stronger countries. And I don't think that actually in the grand scheme of things is good for the world economy. But I do think that similar in some ways actually to what happened with the EU and Brexit. I think Brexit was a reaction to feeling that the EU as a kind of institution wasn't really operating as it could and at its best. And I think it's a similar sort of dynamic with the World Trade Organization, that it does need to find a way to change and evolve and react to the fact that the economy is much more global now and there's far more connectivity between countries, and that's come from travel, people knowing about companies and trade in other countries that has just changed that landscape, and I think they need to react to that.
We have this fantastic article by Douglas Ledingham, lead manager of Pacific Assets Trust. He talks about how investors typically assess a company on metrics that can be plugged into a spreadsheet, sales, cash flows and earnings per share, rather than the leadership of the company. He says strategic leadership can inject firms with a lot of advantages, as it helps shape culture, capital allocation and corporate behavior during a financial crisis. Is there too much attention paid to the numbers rather than the character, the motivation and the competence of the people who own and direct the companies?
So private equity isn't really just about stock picking. It's about what am I going to do with that company once I own it? And as a private equity manager, they are really involved in operating the business and all the things that you were just talking about. So who is the management team and how can I get the best out of them? Is it a kind of family that owns a business? Is it the founder or the original entrepreneur? Or actually is it a new management team that's come in over the years? The challenge of public markets and I think it's why actually a lot of companies want to stay private for longer, is that you're often managing to the next reporting cycle and what are the quarterly results going to be? How's the market going to react? What should I do to make those numbers look the best they can and stick to the projection that I made, where private capital has a much longer time horizon and is thinking about that overall picture and reinvesting into a company to help it grow over the 5-6 year hold that you might be thinking of, rather than that kind of short-term mentality.
I think that's a fascinating point you're making, Charlotte, because there's so much talk about having these robo-managers running portfolios, and we had a piece by Pavel Gripek of the Omphalos Fund saying that the AI, the high-tech fund managers are now better than the humans. And I studied at London Business School, and I had this famous professor, Elroy Dimson, I think he's still going, who said active management was a triumph of hope over expectation.
Yeah.
But these days, there are so many more opportunities in the private assets and the listed stocks. So that would suggest the use of the robo-advisors, the AI and the technology is kind of limited, because you need the human managers very much for the private markets.
Using AI tools to do that real kind of analytical research is definitely a sort of innovation that helps in passive investing or in more kind of public markets investing. It's quite different in private markets, and as you say, the human element is incredibly important, and that is why, as sort of active managers, private equity believes that it should generate a better return. So you don't necessarily want to just have one or the other. I think the two can be quite complementary, and private markets make up maybe kind of 10% of the wider market now. So it is important to have an element of private markets in your portfolio, and the mindset there, the way of generating returns, creating value, being much more involved is different. And the way that you can use AI tools is also quite different. You can use them in that kind of assessment in selecting a company that you might want to invest in. Private equity uses AI tools extensively actually within their companies in improving how they operate and making them more efficient and improving productivity. That's a really important part of that overall picture of how I'm going to help this company to grow. But fundamentally, it is a people business.
Everyone I talk to is discussing increasing allocations to European companies, Ali, despite the fact that some of the best tech is still coming out of the US, as they're really worried about the whole US governance system, the rule of law, the attacks on individuals, on institutions such as the Federal Reserve coming from the White House. What are your thoughts, Charlotte, on this changing asset allocation balance, this clash of ideas and approaches between Europe and the US?
When we think about the portfolio construction and when we sort of recommend to our clients and the vehicles that we run, the ideal geographical diversification, we are thinking over the longer term. And I still think, despite the noise that you've seen in the US in particular in the last year or so, that the US is the deepest, most mature private equity market, and it is a key component of any private equity portfolio. If you have a global portfolio, it has to have a meaningful component in the US. Europe is really interesting because, you know, in our portfolio, in Pantheon International portfolio, it's about 33% of the portfolio, which is a bit bigger than what the industry reflects. It's interesting because it's much more fragmented, and you need to speak different languages, understand local cultures, be networked in a number of different countries to be able to operate in Europe and uncover interesting investment opportunities. And that's quite different in the US, that is much more of a sort of collaborative, single economy where you don't have borders, you don't have kind of language challenges. From my experience living in the US, people are very open to chatting to anybody. It's very sort of, we can work together, and it's the kind of classic American dream in each investment opportunity that we see come through. And more than half of our portfolio is in direct companies. So each time a company opportunity comes along, we're assessing that specific business. That's where we can be a bit more nimble and sort of pivot to say, right now, actually, there are some quite interesting opportunities, both in terms of the market environment and the pricing environment in Europe relative to the US. But I think it's a little bit too early to say that actually, the sort of US exceptionalism is over, and that fundamentally people should be long-term steering their capital away from the US, because that's a bet that I'm not sure I would make right now.
Because I think the only clash of ideas we're seeing in the studio today, Ali, is between the tea drinkers and the coffee
drinkers. And I have to admit, I also went for coffee, so we're on the same team here, Charlotte. Thank you so much for joining us on the show.
Oh, it's been a pleasure to be here. Thank you.
That's it from us today. You can find this episode and all our others on the PWM website or over on our YouTube channel. If you've got questions for our guests, you'll find everything you need online. See you next week.